So next up, we're going to talk about shifts in these trends, these market directions. And the first thing we'll talk about is reversals or market reversals. So no market or asset stays in a set trend forever. Uptrends, once again, uptrends require consecutive higher lows or higher highs to remain valid. We need to see that ascending pattern. And downtrends require consecutive lower highs and lower lows to remain valid. Right? We need to see those patterns for these brands or these labels to remain valid. Once that's not true anymore, once the structure that we have established in the previous lesson begins to break down, the trend could be considered invalid and we could see a reversal in the market direction. So a reversal is a shift in the price direction of an asset to the opposite direction. So if we were in a previous uptrend, we could see a reversal downwards. If we were in a downtrend, forming those lower highs, lower lows, we could see a reversal to the upside. Now, it's important to note that reversals are based on overall price action, and they can't be decided on one or two candlesticks on a chart. We're looking at the general trend, the bigger picture of the market as a whole. Multiple time frames, multiple time periods may be needed to be used or analyzed in order to fully confirm a trend reversal. And this is a good opportunity to check out the market structure lesson for more information on structural changes and breakdowns and overall reversals and how to spot and identify them. So here's an example of a market reversal to the downside. So here is Bitcoin. This is Bitcoin from late July into early September of 2021. This is the 4-hour chart, Bitcoin to US dollar. Each one of these candles represents 4 hours worth of time. Generally, Bitcoin was producing higher lows and higher highs. And it was very obvious, particularly as we got to early August, especially when we saw Bitcoin come back down to here. We saw this slight pullback from the high of about 43,000, maybe give or take, and it comes back down to 38. Well, it's clearly that we saw ascending higher lows. This is a great opportunity to buy the dip, buy this pullback, and then we would see a continuation and some sort of higher high, followed by a higher low, higher high, higher low, and so on. Up until this point, and where we saw in September, around September 4th, September 5th, we saw a full-on market reversal, a sudden shift in the direction. Price was making these higher highs and higher lows. Here we saw a dramatic shift and a breakdown of this structure where we started to see lower lows and a lower high, followed by a lower low and another lower high. This structure would in fact reverse again, but at the time of looking at the data that's just on the chart here without knowing what happens in the future, this was a clear on full out reversal, and we would expect this high to produce yet another lower low unless something is indicating that that's not going to happen. So a reversal generally refers to a larger price change or a significant shift in the market. Smaller shifts in price action that go against the overall trend but don't threaten its integrity are considered to be retracements or pullbacks or rallies. These are different words and different phrases basically for the same concept where it's a move against the general trend. It can be difficult to pick out a full-on trend reversal from a minor pullback when they first start to happen. It's one thing to note. Pullbacks are price action shifts that go against the overall trend but don't invalidate it. Price continues to follow the greater trend. And this is countered by reversals where we see a new trend form altogether. So remember, in our uptrend, here's an example of an uptrend. This is DOT to US dollar on the daily chart. This is an example of an uptrend we're seeing higher highs and then a higher low, and then a higher high and then a higher low, and then a higher high, higher low, and so on, right? We're seeing these periods of higher highs, higher lows. The price retraces but does not invalidate the overall uptrend. This still remains intact. So we wouldn't call this a full-on reversal. We could call these retracements or dips. Different terminology, but basically for the same concept, the same idea that price is moving in this upward direction. At some point, we are going to see these dips, these pullbacks, but as long as it does not threaten the integrity of the market structure, this upward market structure, it's not considered a full-on reversal. Here's an example of a downtrend, a full-on downtrend. We're seeing lower highs and followed by lower lows, or lower lows followed by lower highs. This is a clear downtrend from May going into June and July, and then we see a break in not only in the trend line but also a shift in the structure of the market. We're starting to see higher lows followed by higher highs, right? Higher high, another higher high, a higher low, higher high, higher low, higher high. Generally for this period, late July, August, and into September, we did see a significant shift. This is Cardano, by the way, and this we would consider this a full-on reversal to the upside, a reversal from the downtrend to begin an uptrend. Here are some examples of retracements and reversals on the same chart. Here is chain link to the US dollar on the daily chart. Here are examples of retracements. We're seeing this pattern of ascending highs and ascending lows, and we can even line this out on TradingView with our drawing tools. We'll go over drawing tools in another lesson, but generally we see these lows followed by a high, higher low, higher high, higher low, and so on. This pattern would continue, and we do see these retracements where price did pull back, but overall the market structure remained intact until we got to about May, where we saw the trend break with the establishment of lower highs and lower lows, right? Lower high, lower low. This is a clear indication of a downtrend and clear indication of a reversal, that the trend, that the structure of the trend, the structure of the market was broken. So here's a list of factors you may want to consider when differentiating between a retracement, just a pullback in price, versus a full-on trend reversal. You may want to consider volume, money flow. Are there any chart patterns that could point towards a reversal pattern, or if it's just something that, or if it's a price movement without any typical pattern formation? Are there any changes in short interest? Are people shorting the market or longing the market? That's another concept to take a look at. Taking a look at different time frames, we might want to focus on the larger time frames to see what the larger time frames. Typically, if I'm unsure of a trend or a market in general, I will first turn to the larger time frames, such as the weekly or the daily, where I will have a much more concrete and supported idea of what's going on in the market, as opposed to something like maybe the hourly, which it'll give me good results in the short term, but taking in the bigger picture of the overall market, I would leave towards the larger time frames, the higher time frames. We also want to consider any fundamental changes, any obscure or things that are an uncommon trading activity. Did something happen, or maybe a large holder maybe shifted off some coins, or maybe there's some sort of large transaction. And we also want to keep in mind different candlestick patterns, where indecision candles, these typically have these long tops and bottoms, or long wicks. We can consider those to be periods of indecision where price went higher than the open and close, and also went lower than the open and close, but generally stayed relatively flat and close to the open and close price levels.